Reserve Chairman Jerome Powell said Friday that it was too early to declare victory over inflation, watering down market expectations for interest rate cuts next year. Quote, "It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease," Powell said in prepared remarks. But that's not stopping some analysts and money managers from saying the Fed needs to cut rates starting as soon as March 2024 and possibly have to cut rates 5 times throughout the year. The base case is that they need to do this in order to avoid an extreme and protracted monetary tightening cycle. The markets are largely concluding that the Fed is done with the tightening cycle, but they'll have to give up on the goal of getting back to 2% inflation. So already, 2024 is making ripple effects and we're not even there yet. It's looking like we'll end 2023 with higher housing inventory than this time last year. Home prices will also be up and we have more homes under contract than we did at the end of 2022. All told, these signs position 2024 for a turnaround from one of the slowest home sale years in decades. Price reductions are receding now for the New Year cycle, with 38.7% of the homes on the housing market taking a price cut in the last week. That's a lot, but it's less than the same week a year ago, and it's not deteriorating. Basically, the extremely low volume of sales isn't causing overall home prices to even take a dent. And home prices held up surprisingly well in 2023 despite very few transactions. The median price of single-family homes in the United States was $425,000 for the week, which is unchanged from the same week prior last year and 2% higher than the same period in 2022. That's right, higher again. So no collapsing home prices on the horizon. Sorry, internet trolls. So in the end, we're going into 2024 with slight home price gains, somewhat easing inventory constraints, slightly increasing transaction volume, and elevated but decreasing price cuts. And did you hear about the new conforming loan limits for 2024? Recently, Fannie Mae and Freddie Mac released their revised loan limits for 2024. This increase reflects a 5.5% uptick in conforming loan limits that will allow homebuyers and refinancers to acquire a lower mortgage rate compared to jumbo or high balance offerings of the same loan balance. Nationwide, the new conforming loan limits are as follows. The 1-unit loan limit is $766,550. The 2-unit loan limit is $981,500. The 3-unit loan limit is $1,186,350. The 4-unit loan limit is $1,474,400. For areas considered high cost across the country, the loan limits are even higher. For example, in San Diego County, the 1-unit loan limit is $1,006,250. The 2-unit loan limit is $1,288,200. The 3-unit loan limit is $1,557,150. The 4-unit loan limit is $1,935,150. So if elevated rates and lower conforming loan limits were the reason you were sidelined in 2023, take heart, because it looks like 2024 could be the year that affordability opens up for you once again. Any of you watching this that are looking to buy a house in 2024, send us a DM or drop us a comment so we can help you get qualified. So with that, let's take a quick look at what's coming up at the markets this week. This will be a very, very busy week in the markets, to say the least. Not only are we going to have the final Fed meeting of the year and the big Fed decision, but right before that, we get major inflation information. On Tuesday, we get CPI month over month, year over year, and core CPI month over month. Trust me, this is really going to matter looking at 2024. Then on Wednesday, we have the big Fed meeting and their rate announcement where everyone is expecting them to pause and hold steady, leaving us at the 5.25% to 5.5% range for the foreseeable future. But do keep your ears open during the press conference for any key changes in terminology or posturing the Fed might do to conclude this year and turn their eyes into 2024. Then on Thursday, we get core retail sales and retail sales month over month and unemployment claims. Then finally on Friday, we get the Empire State Manufacturing Index, Flash Manufacturing PMI, and Flash Servicing PMI, which are all indicators of core strength or weakness in manufacturing and services. And that's it for this week. Remember to like this video, subscribe to the channel, and turn on notifications so you catch every episode.